Post it in the post, yeah, you could post in the group too. Help everybody out.
What? Alright.
I'll probably re-watch it actually. My goal here is I want to basically know enough to where I can open up a chart. I can get a top step account, $50 a month. I could pass a challenge,
Mm-hmm.
right? And I can make my money, just quickly make my trades.
We'll
You can get me
get
to
you.
that.
Yeah, we'll get you on your way there. First, we'll go over the basics.
Hmm.
First thing I could say is I only can teach you so much. There's gonna be some studying have you have to do on your part, and also
Hmm.
um chart time, like seeing the market respect certain things, disrespect certain things, and
Hmm.
then you'll just have a feel for, okay, I've seen this before, I know what to do. So the first thing we'll get into is fair value gaps. That's gonna be the main part of this strategy.
Never understood those.
Fair value gap. So you see right here, you see how this candle created a big gap. This wick never filled in this section. So now we have a gap here. This is a gap in price. That's a very big gap, which is better because it's very obvious. And look, when I pull it to the right, what happens when we come back to it?
It bounces off of it.
Literally. And one thing I will tell you about fair value gaps is the wicks, the body of the candle will tell you the story. So the bodies tell the story, the wicks do the damage, which means exactly what it means. So let's just say we closed, let's say this candle closed under here. If this closed down here, the body closed, we now disrespected this, and we're gonna see more downside here. So you want to
Hmm.
see fair value gaps get respected, but you see how there's a gap in price? So this wick, this top wick of this candle never filled this, and this never filled this. Price went so fast here. There were so many buyers. The banks put all their money in right here, and price
Hmm.
never was able to balance out. So now we have a gap in price where it's unbalanced. And when price gets back there, most of the time we see upside. But my strategy is based off of inversing this. So this is price respecting it and delivering from it. My strategy is when we disrespect it, because most ICT traders trade the fair value gap. I trade when we inverse it. So I'm basically attacking all the ICT traders because ICT's become very popular recently. So now the
Hmm.
banks know about fair value gaps, ICT, and they're targeting ICT traders. So a lot of times like this right here, there's a gap right here in price. We had a gap right here.
Hmm.
We also we're delivering off of an order block. So this is an order block right here. It's an up close candle before a down move. So we're delivering from an order block. We inverse this candle. My
Wait.
entry.
Order block? What do you mean? What's that?
All right.
Is that?
So when we're bullish, like
Hmm.
here, you see how we're bullish here? I don't use trend
Yeah.
lines anymore. I don't draw trend lines, but we're bullish. So when you get
Yeah.
these down close candles, if we're bullish and order flow is bullish, we should be closing above these down close candles. So this is a bearish candle right here.
Hmm.
This is a bearish candle. If we're bullish, we should close above it. And if we close above it, so we have a down close candle. Again, here's another order block. I don't use them too much. I like fair value gaps better, but they're good to tell you the bias and which way we're going here. So here's a down close candle, price closed above it. That's an order block. You know we're bullish there. We're also creating fair value gaps on the way up, but fair value gaps. So if I zoom out here, will you be able to see the fair value gaps or no?
Um,
Like here,
so
here's today.
yeah. So is that a fair value gap? The big
This
that
right
huge
here.
window?
There you go. Yep. And guess what? I didn't take a trade off of this. I tape readed a trade. You see this V-shaped recovery right here? When
Yeah.
you see this V-shaped recovery off of a big ass fair value gap, you
Hmm.
know we're going up. And where's my entry? My entry is when we inverse this final fair value gap here. So we have a fair value gap here. We have another fair value gap right here, a small one right here. And this was high of day. So that's liquidity. That's buy side liquidity. So we made a high early in the morning after the news came out today. Now
Hmm.
we're gonna label this. Where are we at? Uh, no. Here we are. Okay, so we have buy side. Put a dollar sign. So this is buy side above us,
Hmm.
which means we're gonna go back to it, or at least we should go back to it because the liquidity's up here.
Hmm.
So, and since we were delivering from this fair value gap, this is basically sell side. So when we come into these fair value gaps, this is also liquidity. There's liquidity in here. There's liquidity in these fair value gaps. So when we return into it, we just took out sell side. Sell side means we took out, this is basically liquidity. We took out liquidity here, which means now we inverse these. We disrespected these fair value gaps. We should go to buy side. Does that make sense? So we took out we took out sell side. There's no more liquidity down here. We
Hmm.
inverse these. We disrespected these. So there's no reason we should go down. So our entry would be a close of the candle, and then we deliver the buy side right after.
Wait, you said there's no reason it should go down?
There's no reason here we should go down because if this is our support, let's just say we used to say support. If we're delivering off of this and we're disrespecting these bearish ones, so these are bearish fair value gaps. This is a bullish one. So we're
Uh-huh.
delivering off of a bullish fair value gap. We're we're disrespecting these bearish ones here. There's more bearish ones we disrespected too right here. We disrespected this one. So you can see it here to here. We're disrespecting these. If we're disrespecting fair value gaps, let's just say you were short right here. Let's say you were short. Let's just say you were short here and you see price come up and rip through all of your fair value gaps. You're on the wrong side of the trade. Your price should be respecting them. I'll show you right here. I turn on the indicator. I only use the fair value gap indicator because it helps me. You see here, price respects fair value gap. Look right here. Price wicks into the fair value gap and rises. So you see that this is how the market moves. Fair value gaps. You know what I mean?
So
Let me go in replay mode and show you. We'll go back. I'm on the 5 minute chart, but we could find something. So
is
fair
liquidity,
so
I was
fair
gonna,
value gaps, it basically fair value gaps is your support and resistance.
hmm.
You see, we're bullish here and we respected every single one of these fair value gaps. This is the indicator, the fair value gap indicator, obviously. But
Hmm.
when when we're bullish, we should respect all of them. Right now it's 4 p.m., so this is the wrong time to trade. I'm gonna go to the kill zone to show you a couple examples. But fair value gaps. So now if you look at the chart, can you see fair value gaps? Like, do they stand out to you? Does
I
any
think,
and like this
yeah, I think
this right
so.
here, this big obvious one stands
Yeah.
out. What did we do? We retraced into it. We took off.
So pretty much whenever there's a big candle, which is usually based on the banks,
Exactly.
price
There's a
needs to balance back out and fill back the other way.
exactly. It
Okay.
should fill the other way. And when it fills the other way, I'll go
What if
to
it
the
just what if it just keeps going up? Is there a way to know if it's gonna keep going up?
oh, if it does never retraces into the fair value gap,
Yeah.
then that's what's called a breakaway gap. And sometimes that does happen where price will never retrace to it because we're just so bullish or we're just so bearish, either or.
Mm-hmm.
So right now, can you see any fair value gaps here? Here, this is the London session right here. I just pulled this up for you. Do you see any?
Um, would it be yeah, would that be considered?
There's a fair value gap, and what happened? We completely obliterated it. We did not respect it at all. What does that mean? That means you see all this liquidity down here? We have a big
Uh-huh.
large wick right here. That's liquidity. Oh, we have a large wick right there. We have equal lows right here. So a lot of people are trying to buy this and use this as support and resistance. These are all the retail traders. They're getting stopped out. My entry would have been when this candle closed and completely disrespected this fair value gap. And I would have targeted, yeah, it would have been a 1-to-1, not even. Let's see. And we just put in an order block right there as well. So we put in an OB, an up candle before a down move. That's an OB. Even more reason why we should go down here. And also look at all the stop losses. Look at all the stop losses that were up here. Hang on. Look up here. What happened? Look at all these stop losses. Oh, Why is my computer tweaking? Jesus.
Brian said, "Look at all these retail traders losing their rent."
Yeah, look at what did we do here? These are all stop losses here. You see all this? This
Yeah.
liquidity. And what did we do when London session opened? We pumped up above it. We barely displaced over it, which means there was really no move above it. So price was just grabbing liquidity, inverse this fair value gap. So it disrespected this. We entered, saw a little bit of drawdown, but we still respected the inverse.
How did the inverse? So you said it inversed. How does that work?
So if we're bullish here, you want to see this candle respect this. You see this box?
Yeah.
That's the fair value gap. So you want to see the can if we're bullish, if you're bullish, you want to see this get respected. But when you see two
Yeah.
big ass candles completely disrespect the fair value gap, you
Hmm.
know we're bearish. And I'm also bearish before I even see this down move, I'm already bearish because I seen we took out
Yeah.
liquidity up here.
Mm.
Also, I'm bearish because look how high we are. You never want to long this high. We're in premium. You want to short in premium and long in discount.
Hmm.
Just the way the markets work. But anyways, when
Yeah.
when it's disrespected, you see what I mean? How the body of the candle closed below
Hmm. Oh, actually, yeah. Based on the fair value gap is the
is
wicks.
from the first candle to the third candle. So this is the fair value gap. It's in this candle. It's in the huge candle right here.
Hmm.
Fair value gap's in the huge candle, but you draw it from this wick, the first wick to the third wick. It's always going to be the first wick to the third wick. So we have another one right here. There's another gap right here, but this is a bearish one. I'll draw that in
Oh,
red so
so
you can see it. A bullish one here, and then a,
yeah.
ba- a bearish one there. Let's draw that in blue so you know it's
Oh, so you're using the wicks to determine what the fair value gap is whenever the wick.
exactly. So you know the size. Yeah, that's the size of the fair value gap. And once we disrespected it, we're gonna take out all this. I don't know what's gonna happen, but I'm pretty confident we take all this out. Boom, boom. What's that? This candle right here that's a 20-point move with one contract. That's $400 in one candle.
Oh, baby. So
So
hold on. So basically, if it goes below that, let me find it. Yeah,
here,
so
let
if it goes
me let me
below,
let me put the indicator on there. Those are the fair value gaps that the indicator shows, and those are the only ones available right now.
okay. Well, the fair value gap that was that the first one, right, with the big
Yeah,
candle.
this
Yeah,
one.
yeah.
It would be this
So
right here.
so the second it goes below that the first time, I can basically just put a sell and just hold.
Exactly. So right when it closes below, here's your entry. And yeah, we played around inside of it a little bit, but
Hmm.
we used it as resistance now. You can call it support and resistance. It's not. It's whatever you want to call it. You could call it that. But you see, we closed below and we respected it. We respected it to the opposite side, which is what you want to see if we're bearish here.
Hmm.
So now this candle here will probably make a fair value gap. Oh no, it doesn't make a fair value gap. All right, so we're gonna go forward in time a little bit and show some more examples. All right, so here, see? Now we took out sell side liquidity. So we took out the liquidity, all this under here. All this under here was liquidity. We took it out. I would say we're pretty bullish. And now we came up and we made another fair value gap. So if I'm bullish, I want to see this get respected. So it's being respected. Never
Yeah.
mind. It just got disrespected. You saw that? You
Hold
just
on.
did you see that get disrespected?
I'm looking for the fair value gap.
It's the green one right here.
Oh, I see it. Yeah.
So if I'm bullish, I want to see it be respected. Let's see if it gets respected. It depends on the body of the candle, not the wick. And right here,
Oh, so if it bounces off of the support, with
yeah,
the bottom,
yeah.
then it's probably going to go up because it's respecting the fair value gap, and that's how the market's moving.
Well, the markets don't move based off fair value gaps. Yes, they respect them, but the market moves based on liquidity. So if you know where the liquidity is, you and the fair value gap's getting respected, then you're probably in the right direction, if that makes sense. And there's a lot of liquidity up here. I would call this trend line liquidity. There's a bunch of trend line retail traders short in the trend line.
Uh-huh.
But anyways, Here, this would be a short entry. I don't know if I would take it because I already would have taken that trade and been done for the day. But let's just say we take this. Okay, we inverse this to the downside. So we inverse this to the downside. Maybe there's some liquidity here. Let's see.
Is there
Uh,
rules? Is there rules to how many candles should be between the two sides of like a fair value gap?
no, it's always a three candle formation. So
Okay.
you're gonna have
All right there.
here. Let's see. Let's see if this trade actually hits first, and then I'm gonna show you. But it's a three candle formation. So you're gonna get one candle, then you're gonna get the fair value gap, then you're gonna get the next candle. So
Gotcha.
here we inversed it, and more than 9 times out of 10, we go to this low. We at least go to the low to take out the liquidity. Because where's the liquidity right now?
Oh,
Below this low, people are
right.
they're buying. So they're putting their stop loss here. We're targeting
Uh,
that. So we should go down here. If we don't, it's a losing trade. And we closed back above. Now you see the body? The body
yeah.
closed back above. That's my stop loss. So I don't place a stop loss because it's very every trade is different. So we don't use a stop loss. ICT says when the candle closes back above, I would have gotten stopped out here. So this would
Yeah.
have been a losing trade. So when the if you're bearish, you don't want to see this candle close above because we closed below here. So you don't want to see it close above. And so this would be a losing trade, not based off of a stop loss because I don't use a stop loss. I use the candle closes. So where if the candle closes back above, I'm out of the trade and that's it. It's
Hmm.
actually a lot better than using a stop loss because back then using a stop loss, I would move it and move it and move it and move it. Now, if I see a candle close back above or back below, I'm out. I'm just out. That's it. There's no moving the stop loss. There's no, oh, maybe it's going to come back. Because 9 times out of 10, if we close back above this, we're going to go back to this high where the liquidity's at. And actually, these are equal highs. So we're probably going to go there right now since we closed back above. Look at that. Boom, hit the equal highs and disrespected it again, this fair value gap right here. So since we closed below, we took our sell got stopped out. We closed back above, I seen equal highs. Okay, let me go long here because there's liquidity and we're inversing the fair value gap that we just inversed. And you see this gap right here, this one right here,
Hold on, hold on. Oh, I see it. Yeah.
we
That's
never,
a bearish
we
gap. So
exactly.
if it doesn't break through that like resistance, then it'll bounce off and it'll go straight down because it was a bearish gap.
It should, yes. So this one, I think we're gonna go into it. Because we're so bullish here and because this gap never got traded into, most of the time we have to balance these out. So we're probably going to hit this next and let's see if it gets respected.
So if it respects it, we sell, and if
Yeah,
it
like
doesn't,
just right here. Exactly. But you don't buy or sell until you get the confirmation of the disrespect. So right here, since we respected this, we want to see this get disrespected. So this is a bullish one. So
hmm
if we're delivering from here and we're coming off of this fair value gap, our entry will be when this gets violated. Because if this gets violated, that's our entry. We don't know if it's going to be violated yet. All we know
if it closes through it, or if it
right
just
there, it
passes
just
through
it,
it.
it just close if it closes, the body has to close above the fair value gap. And
Okay.
this is the fair value gap right here.
So if a wick is above the fair value I got, but no part of
It
the body.
means nothing. The bodies tell the story, the wicks do the damage. So the bodies tell a story, the wicks do the damage. Um, but we closed above here, look. So that means common sense here. If we're delivering from a bullish fair value gap and we're disrespecting the bearish ones, what does that mean? That means this liquidity up here where people are selling should get ran through, especially with this momentum we have. This momentum right here is ridiculous. And so I would take a buy at this close of the candle. The
Hey,
candle
that's
closed, huh?
no, just yeah. So that's an entry. Okay.
Exactly. And my stop loss is a close below. So
Mhm.
we closed above here. We closed above. And look what happened. The next candle tried to break back below it. It couldn't. It wicked up and got rejected. Let's see what happens. Close back below. That would have been a stop out there. So sometimes price disrespects our fair value gaps. You know what? Ah, this is gonna get complex though, real quick. The reason this trade failed is because of an SMT, and that's a whole nother conversation. Because trades like this don't fail with ICT. Like this right here should go to this liquidity, and the reason it didn't is because there's an SMT. Oh, I guess I'll get into. I'll Let me get this out the way then. So if you know what a fair value gap is, if you can spot a fair value gap, then we're on our way doing good. The next thing is tell me where is liquidity, and it's only in two places.
1 second. I'm writing down that last piece. Fair value gap.
Yeah.
Where's the liquidity? Liquidity is going to be at the very top where we had the reversal. So where that huge candle ha is now wicking on both sides. People's stop losses are probably up there. Um, and liquidity is also, I guess, at the bottom of this range. So at the
Yeah.
very bottom, there's two wicks there where it changed from. Yeah.
Yes, exactly. So I guess the simple answer would be above the liquidity is above old highs and below old lows. So above
Right.
old highs, below old lows, there's gonna be liquidity at every single one of these locations. So here we have a high here, there's liquidity there. We have a high here, there's liquidity. Liquidity here at a low, liquidity at a high. Liquidity is above old highs, below old lows, and that's all you need to know. If you can spot old highs and old lows, you see I marked them out here, high, low, high,
Yeah.
low, high, low. There's liquidity at all of these. Sometimes we won't always get them in one shot, but like this one, we came up, we swept liquidity, we reversed back down. Here, this right here, there's really no explanation for this because we didn't bounce off a fair value gap and we didn't take liquidity. So the reason this went up, no idea. It's 5:45 a.m. You shouldn't even be trading at this time. So Um, all right. And let me get into an SMT. So when with ICT, we only trade NASDAQ. It works on everything. It works on Bitcoin. It works on everything, but NASDAQ is the cleanest. Like it shows the most respect to everything. Some charts will disrespect it and re-respect it and disrespect it. So we only trade NASDAQ. You can trade other charts. Your win rate won't be as high though. Like let's just say I know a guy who has a 90% win rate on NASDAQ, but he has a 60% win rate on Forex. And those are real statistics. But
Hmm.
NASDAQ just respects it more. So these are the sisters here. Let me
This.
Nasdaq, Nasdaq, S&P, and the Dow Jones are the three, I guess they call them sisters, cousins. The reason they call them that is because they're both three indexes. So you have the US 30, which is YM. You have ES, which is S&P. We don't trade US 30 and we don't trade the S&P 500. Reason being is the charts are not clean, like Nasdaq is clean. You'll see what I'm talking about when you start trading again. So we use Nasdaq to trade, but we also watch ES, we also watch the S&P and US 30 for things like this. If if Nasdaq, you see how it hit this high and then reversed?
Yeah.
That's not a good example because they all hit the high. So you see how the charts are identical here when I go from S&P to Nasdaq, they're pretty identical, right?
Yeah.
They're not always going to be identical. And when they're not correlated, that means there's an SMT. So they're all US based indexes, so they should be correlated. So
Hmm.
sometimes when you're in a trade, I'm gonna find you an SMT actually.
NASDAQ.
Um, okay, perfect. Perfect. If there you
What's
go
that?
there. It's a it's a ICT divergence basically.
Okay.
So you see how NASDAQ hit this low right here? You see this line I got? NASDAQ
Yeah.
hit this low. I'm gonna go split screen here for a second and we're gonna pull up the ES chart. And we're gonna go to the same location. So this is Nasdaq, this is S&P. That same low had a divergence. This is an ICT divergence. It's not using no stupid indicator. This is real divergence in the market. Like, okay, then the Nasdaq 100 hit this low, but the S&P didn't hit this low. That means mar the market should reverse here and go up. So sometimes you're gonna want to be careful and look out for those. As time goes on, we'll talk about that more. That's a little bit complex, but
I got you. It's a
When
divergent
it's
line.
uncorrelated, when these are uncorrelated, it really just means stay off the charts, don't trade it, or just get out of the trade you're in if they're uncorrelated, because they should be correlated. If they're uncorrelated, that means there's news or there's something going on where they're not correlated.
Gotcha.
And so if a trade fails, if you ever trade, if you ever have a trade that fails and you don't know why, there's probably an SMT there, which means they were probably uncorrelated and there's really nothing you can do about that except move your stop to break even or just get out of the trade once you see it's uncorrelated. So that's out of the way. We'll go over some examples from today. So the trade I took earlier, I actually sent it to you. We had a big ass. Okay, so first off, we flew here. 8:30 news. This was 8:30 a.m. This candle was 8:30. Boom. All right, I see that. I wasn't trading that because I wait for the yeah, I wait for the news to come out, but we had I think that's a 200-point move before the market even opened. All right, so the market opens over here and we just keep going bullish. I didn't want to buy because we're already so high up. When you're this high, what the fuck are you buying? Like, yeah, it still went up, but you're buying, and this is a very low probability trade because you're already so high up. So I was
You
looking
know,
for short. I was looking for shorts
is it considered liquidity at that 18,000 level?
right
Because you see how
here,
it 18,000. So on the low, it keeps dipping below 18,000 and then it'll go up and then it'll
right
dip
here.
below it, go up. Yeah.
No, that would be support and resistance. Honestly,
Oh,
I don't want to use that anymore, but there's reasons why it's dipping. You want to see? There's a fair
okay.
value gap right here holding this. There's another fair value gap over here holding this. I'm not just drawing these. There's actually fair value gaps here. And you see there's little things that you'll see. Mainly what I saw today though was we're already so high up. I'm looking for shorts. Okay, now 10 o'clock comes and we create this huge candle down. Okay, we got to retrace to this, at least to discount. So I don't really use a Fibonacci, but you can throw a Fibonacci here and you know you're in discount now. Or I mean you're in premium, so you want a short, or if you're in discount, you want a long. But since I was here, these colors are fucking with me. So let me put it like this.
How do you know it's discount?
Well, 50% of the range. If you see these two lines, I mean, you draw it from the high to the low. So here was the high, and we draw it to this low right here. So this was the swing. This was the manipulation leg. Price manipulated here, and then we had a retracement. So once we retrace into here, this is discount. I mean, you don't really need to know a Fibonacci. I don't really use it. I don't ever pull it out because I already know we made this move down. We had equal lows here, pretty much these three equal lows. These are retail traders buying pretty much. That's probably a double bottom on a smaller time frame. We're on the 1 minute, I know, but people use the 15 second, people use the 5 seconds. So that's probably a double bottom on the smaller time frame. We also are so high. So once I see this gap, I'm like, okay, I want to see how we react when we come into this gap. This is what I was thinking today. Then I realized, okay, we got a bullish fair value gap here. I didn't take this one because the risk to reward was just shit.
Yeah.
Um,
So the fair value gap is good until it's broken, basically.
exactly.
Okay.
Exactly. So this is a bearish one because we went down and we created fair value to the downside. So we'll make it red. So this is a bearish fair value gap. Then when we came in here, I seen a bullish. This is a bullish fair value gap right here. I'll make it green. I seen a bullish fair value gap. We bounced off of it, but right now this means nothing to me because we're in between what? We're in between a bullish fair value gap and a bearish fair value gap, and I'm short biased anyway. I was short on the day. So this could have been a trade here. So that means we were delivering from this. We were bearish. We were delivering from a bearish PD array. What did we do here? This is textbook right here. We swept this high. There's a high here. These are stop losses right here. We swept this high. Probably breakout traders taking longs, people selling here. Everybody's getting wrecked right here. This is a liquidity sweep. Like we used to get fuck, this would have been us right here, either going short here or going long here. But I wait, we got a liquidity sweep. We went above this high. When we came back down, We closed below this fair value gap. I didn't take this trade because obviously you can see the risk to reward is horrible. I would have targeted first this low because this is the first low after the fair value gap. Then we have another low here. So I would have targeted these two lows. It worked. It worked to this low. Why didn't it come to this low? Well, because there was more liquidity above here. So once I
Hmm.
seen this and I seen a double liquidity sweep, actually when you zoom in, I gotta zoom in for this shit. But I seen this sometimes by it's even by the tick. See how we swept this high by one tick?
Yeah.
That still took liquidity. Even how small that is. That little bit, that precise tick right there took liquidity from this high. And once we came back down, once I'm like, okay, we didn't even get above this high. We couldn't push higher here. Price did not want to go up. I see another bullish fair value gap get put in. So now we're coming out of a bearish fair value gap and we're disrespecting a bullish one. I'm going short right here at this candle close. You see that candle?
Yeah.
So this is literally what I did today. I went short right at this candle. Oh,
Okay. Interesting. So, I don't know. So it's almost like having multiple confluences if you have a bearish fair value gap and then a bullish fair value gap that doesn't get respected.
yeah, you're a smart guy. You know what? Most ICT traders will do this. And most ICT traders will fail. Well, they won't fail doing this, but it's a lot harder to trade like this than yeah, exactly. So the way we trade it, we wait for confirmation. We're not just, oh, I'll let you finish writing and then I'll go into what I'm gonna say.
Okay. If a bearish fair value gap. Okay.
So I know it looks like a lot right now, but when we get this bearish fair value gap right here, most people will just sell when it comes in here. When it comes into this big ass box, this big ass red box, most ICT traders will just sell here. But if you're just selling here, you have no idea if it's gonna go down. You have no idea. I mean, yeah, there's a fair value gap there, but it could be disrespected. So instead of just blindly selling this fair value gap, we are waiting for a bullish one to get disrespected. That's confirmation. Now we are respecting a bearish one. We're disrespecting a bullish one. We know there's liquidity down here, and we already took the liquidity from above. Where the only place we can go is to the next liquidity. And what happened when we took this liquidity? So my trade entry was right there. I held it right here. So it's 6 to 76. It was almost a 30-point move. That's money in the bank right there. 30 points. You only need 5 points. 5 points a day is enough to keep the job away, honestly, in my opinion. I'm not there yet, but 30 points is hard to get. You only need 5 to 10 points on NASDAQ. That's all you need. 5 to 10 pips, or call it whatever. It's called points, but they call it pips. I don't know. So that's that trade. And after we took this low, what happened? Look what happened. We reversed immediately. Most of the time we'll do this because look, liquidity was taken here. Now we reversed. We had another entry. So we took liquidity, and then that was a bearish fair value gap right there. So we swept liquidity. That's first off. My trade was a banger. Boom, hit TP, took liquidity. And then we got a bearish fair value gap that formed. When I see this bearish one get disrespected, now we're going up. And now we're going to take at least this liquidity here. There's some resting above here, but the problem with this is if we already took liquidity, this high doesn't need to be taken because we already swept liquidity. There's no reason for this high. There's no reason for us to go up here and sweep this high again. It makes no sense. We already took liquidity. There's no reason to go back up. But these internal ones, you at least got to go to these internal ones because the market is always going to liquidity and we use fair value gaps as our entries. So
So the entire market. So you're saying the entire market is just there to take the money from the retail traders?
exactly.
That's crazy.
Yeah, we're just going to liquidity. You see the buyers here got stopped out. Now the sellers here got stopped out here. The sellers here got stopped out here. Then once we took out these sellers, once we took out these sellers right here, you see this low? We took
Yeah.
this low, I mean we took this high And what did we do after that? We came right back down to take some more liquidity right here, if I can get this thing straight. And we took more liquidity. But when you see this, when you see price go below, go down this hard, I honestly was bearish here. Like I was bearish to this,
Hmm.
but once I seen this big gap getting respected, okay, let me look for a long. Maybe let me find a long. Okay, if we respect this big ass fair value gap, if we respect it and we disrespect a bearish one, which we have a big obvious bearish one there, all the beginner ICT traders are gonna short this. They're gonna short this and get wrecked. They're gonna short this fair value gap and get wrecked. I'm gonna buy it and I'm gonna hit their stop loss.
Interesting.
So I'm trading ICT, but the way I learned it was pretty much to target the ICT traders because most beginner newbies will sell this fair value gap, but that's not what ICT teaches. He doesn't teach you to sell this. There's reasonings behind why we're just gonna blindly sell it or buy it, which I don't at all. I avoid it. I wait for it to be disrespected. I don't hope because if I sold here, let's just say I sold this fair value gap,
Hmm.
the meeting might end. I might have to start a new one. If let's just say I sold here, I'm gonna
Hmm.
be sitting in this trade like, oh, please reject, please go down, please reject, please go down. Like you don't fucking know if it's gonna get respected. And obviously it didn't get respected. And when it didn't, there was an entry right here and we would have targeted honestly this right here when you see trend lines like this we used to use those, but when you see trend lines like this there is liquidity at every single one of these touches right here. There's liquidity here, there's liquidity here, there's liquidity here. All these levels are going to get ran through. That's a trend line. Yeah, we used to sell it, but we don't do that no more. I don't. This and what happens to all those levels? Liquidity at this trend line touch, liquidity at this trend line touch, liquidity here. It ran through all of them. Nobody's eating today if you're a retail trader. So does that make sense for you?
Yeah, that makes sense. Would that also be considered a trend line break?
Yeah, I guess so, but I don't trade a trend line break. I would trade